So if you're looking for an ICT strategy that plays out 2 to 3 times a week, this is the video that you guys need to be seeing. So we're going to go through the essential rules. I haven't made one of these videos in a little bit of time, so I thought it'd be good to give an updated reason into why some of the rules have changed and also do some actual backtesting throughout the trades that we took this week. So I wanted to start off with the essential rules. The first thing we want to be looking for is a liquidity sweep of either the London highs, London lows, Asian session highs, or Asian session lows. Once we get that liquidity sweep, we want to see a change in the state of delivery, also known as a market structure shift. And we're going to be looking to enter on the 1 to 5 minute time frame. And we're only going to be traded in the New York session of the hours between 9:45 and 11:15, which is 15 minutes after the New York futures market opens, and about an hour and 45 minutes after the New York futures market actually opens. So the entry is going to be either on a fair value gap or an inversed fair value gap. Preferably you want it to be a fair value gap. I've seen a lot of inverses over my time fail, but I don't see fair value gaps failing very often, especially when they're paired with a vector candle. I'll actually add that into the thing now. So we're going to go over a few things that new guys actually struggle with, and that's no trading on bank holidays. And also you want to wait for red folder news, every single piece of it, to finish before you actually enter a trade, because the market may manipulate one direction to only go the other direction once news is announced. So we need to be waiting for that possibility. So we just avoid trading if red folder news is coming out later than our trading entry. So we only take a maximum of 2 trades per day. So it's either a win and then we're completely done for the day, a loss, but then we can bring it back at half risk with 1 win, or just 2 losses and then we just turn the charts off no matter what. You could see the best entry of your life happen 5 minutes later. Just don't take it. It's not a high probability day because the first trade and the second trade should have either played out. So once we failed 2 trades, we're completely done for the day. So that's only happened to me and the team 2 times this year, where we've had 2 losses in a row during one trading session. So I know a lot of you guys are going to say, how do you actually know that this is actually profitable to be trading? So we have here a copy of the trades that we've actually taken throughout the entire year inside of the premium Telegram group, which you guys can see right here. And this is the results that we have incurred so far. So we can see here, this year in quarter 1, we're actually up 972 points in 3 months, which is exceptionally good. And we're off to a good start in quarter 2, which will be uploaded onto the channel once quarter 2 has actually been finished. So you guys can get access to all of this inside of the free Telegram that I actually have. So you can come onto here, you can see a copy of the ICT trades, and you guys can go back and backtest this to make sure there's no bullshit here. I'm not going to be wasting any of your guys' time. There's no point for me to waste anybody's time here. So you guys can just go over here and click on this trading sheet, and it's going to break down every single trade that we've taken inside the group and taken on live stream. So with that being all said and done, what we're going to start doing now is actually start breaking down trades in real time. So we're going to go back over the trades that we took this week. So we took a trade on Tuesday, and we also took a trade on Wednesday. I'll pop them on screen right now. So we can see right there that the trades that we took was one on Tuesday, and also the second trade was on Wednesday. So let's go back to that time frame right now. Coming into the trade that we took on Wednesday, so what we can see here, what we want to be marking out is the London highs and sell side liquidity. This is simply all that you need in order to identify where you believe the market will go. Of course, not everything is bulletproof and things do go wrong in trading. Don't be sold this idea that you find this golden trading strategy that is just going to make you unlimited profit. That's not the case, guys. It really isn't the case. I'm not going to sell you that dream. The reality is you can make a stable income, a stable side income, however far you want to take this. If you just want to have one account, it's a nice little side income. You want to level your game up and have 5 accounts, 10 accounts, 20 accounts. You can make insane profits from this strategy. It depends what your risk management is like, and it also depends how far you really want to take the game. Some people just want it for a little bit of side income, and you can guarantee yourself around $1,000 per month per account on average. As we approach coming in towards the session, I could see here that price was respecting this 4-hour fair value gap after coming out of a W formation, which is another manipulative move for market makers to actually send price higher, to induce people to think the price is going to go lower at this level, to only come up, induce people into the longs, to take them out of their positions to continue with the move. So I understood here that it was generating liquidity inside of this zone, the consolidation zone, and during the New York Open, it just attacked the lows, tapped into this 4-hour fair value gap where people would have had their stops resting. So we know that price is looking to reverse from this point. So I was only interested in taking a long from here. So a lot of you might be asking me, why would I not be interested in taking this trade right here? You can see this is a clear market structure shift and move higher, but we didn't enter at this position right here. The reason being is we had news at 10 a.m. So coming into the session, obviously we didn't take this trade because we were waiting for red folder news that was coming out at 10 a.m. This is why one of the rules that I went over earlier is so important that you guys actually pay attention to and listen to. Because you would have got caught in this trap thinking this is a market structure shift to take price higher, but really this was just setting up to get people into the trade to only go and take them out at a later position. Now that red folder news has actually passed, what we want to see is a market structure shift. And this entails taking out the previous swing high. So the reason that I didn't take this trade was because price would like to come back to data lows. So what consists of a data low would be when a news candle is presented. This is called a data candle. Price sometimes likes to come back, test this zone to only go and move away from it. So I was a little bit cautious about taking a trade from this exact area right here. I wanted to see a little bit more conviction in the trade I was looking to take. So right here, we can see that prices have respected this 1 minute fair value gap resting inside of a green vector candle. It's now moved away and it's broken another swing high. So now I have full conviction that we are starting to trail higher and maybe even target the previous data high candle from yesterday, from 8:30. My apologies, from 8:30. So earlier on in the day, there's another data candle right here that we would like to target. So I believe that actually during the signal session and during the live stream, I had my final TP resting at 170 points away, which would be filling in this vector candle right here, which consists of these yellow boxes. This is a price that where orders are stuck inside of the order book, so price would have to come back to fill them to continue with whichever move it was looking to go in. Therefore, we did take the trade right as price ended inside of this fair value gap that you guys can see here. It's as simple as that. Once we get a tap in, we press the buy button and then we let price do its thing. So you can see price tapped into it. And we paid 4 contracts on this trade with full risk. And then our first TP would be at this previous high, because if price just wanted to come up, take this high out to only go and move lower after sweeping the buy side liquidity, we were protected and we'd taken out half of the trade nice and early and then moved our stops into a break-even position. So by this point, I would have sold 2 contracts, so I would have locked in around £2,000 or $2,000 on each account. And then we would have moved our stops instantly to break even. So our second TP rests at this previous high right here, and we'll see how that plays out. And there we go, guys. We got a second TP smashed. And then by this point, I'd move my stops to this point right here. So I moved my stops to this point right here. So we secured another 36 points, just giving ourselves a little bit of a security on in case price just wanted to come reverse from this level as we're getting blue vector candles at the highs, which is always a little bit scary because that means that people are induced into actually longing from this point. And we know that market maker, as soon as other people are longing, will then run the market down as he has acquired the liquidity and orders in order to actually start trailing lower. So to protect ourselves, I did put it below this swing low. And there we go, guys. Once I'd seen that this did not get taken, I instantly moved my stops to this zone right here, just outside of this fair value gap. And unfortunately, I was stopped out. The trade did proceed to move higher to the targeted zone that we had laid out. As we can see there, it took out this high that we had right here. So I did have a bit more of a conservative approach, but I just like to lock in profits and then get on with my day. It's as simple as that. So we managed to secure 120 points on that trade right there. Let's go on to Tuesday's trade. So coming into Tuesday's session, this is the New York Open once again. Prices actually trading lower, but I want to see a sweep of this high right here in order to actually trail this down lower. And the reason I had a bearish bias coming into today's session was because we had a W formation at the lows on the higher time frame. You can see here, double formation, pullback, rise, take out this high, and I want to see a little bit of a pullback to come test this fair value gap, which is the green vector candle, and then actually start trading higher. I made it very clear inside the signals room that I actually have a bullish bias overall, but a short-term bearish bias. So let's have a look what opportunities arose on Tuesday. So we could have taken a long at this position right here, but there isn't actually a single entry inside of our time frame. So you can see there at 9:42 there's one, but that's not what I'm looking for, because you can see here it swept this low and then it just trailed very, very slowly, with greens pushing out the zone and then just coming straight back into it. So I don't really like this price action, and I'm not willing to engage in any of that. We want to see nice clean moves, algorithmic moves, not none of this chop fest. We don't want chop fest. Avoid chop fest at all costs. This is bullshit. You don't want to be any part of that. Any part of this, don't want any part of that. You want to see nice clean, just from A to B in 20 minutes, get paid and get out. Okay, people, so on ES, this yesterday high that I've had marked out actually did get swept, which gives us reason to take the trade on NQ. You're just going to have to trust me because I can't open the split screen thing and do a replay on both NQ and ES, which I think is bullshit. But there we go. It doesn't happen. It's not going to work. So ES actually taken this high, and if you can understand that ES and NQ are related pairs, it makes it obvious that ES is the major pair and NQ is like the lower indice. So essentially what that means is if ES takes out a high, I'm confident that I could take a trade on NQ because most of the money actually trades on ES, but NQ moves faster. So that's why I trade NQ. But we can see here clearly, unicorn model setup, beautiful stuff. So if you don't know what a unicorn model setup is, it's a attack of the highs with a displacement lower and a breaker block inside of that zone. So we can see right here, we have our breaker block. We can see here, we have our fair value gap right there. So it's a beautiful trade to be taken after sweeping the highs, and ES is taking out yesterday's high. So straight away, no matter what, you take this trade. This is a trade that you take, and yeah, simply that's it. And then you leave your stop loss at 25 points. So you can see it's above the candle that created the fair value gap, a respectable stop loss, and then target the daily open. Simple as that. There you go. See, we're tapped into that trade. Absolutely zero drawdown on that move right there. So there we go, people. We're inside of the trade right now. And our first TP would have been at 25 points. So it's a quick 1 to 2. Secured in the bag. So at this point, I'd close half the position and move stops to break even. Just like that. How simple. And then would target these two relative equal lows as a second TP at 44 points. And there we go. So we take off another contract. And then we'd leave a optimistic target to target this wick right down here just below the daily open. And there we go. So that at this point we're taken out of the trade and we managed to secure a nice 66.75 handles total on that trade right there. So if you guys have got any questions, that's going to be us done with the breakdown. So if you do have any questions, make sure you leave them in the comments or just message me on Instagram. Make sure you guys join the free Telegram because it does have actually lots of useful information. I'll run you through it right now. You can see the weekly trade breakdowns. So this is the stats for this week, 187 point gain on the week. And also you get access to the copy of all of my trades that I've taken. So you guys can go back and back test it and see why I took those trades. And there we go. There's lots of useful information in there and it's completely free. So why not join it? Anyway, boys, catch you in a bit.